Hello again. So we have more homework in chapter 10 to finish. We have problem 10-4A. Now remember that the brief exercises that we did previously, right? Those are pretty simple and they're just focusing on one topic. The exercises are a little more complicated than that. We didn't do any in this chapter. And the problems are more comprehensive in nature. So, just be aware when you're doing the brief exercise, they should not take you very long. The problems take time. So here they give us a stockholders equity section of the balance sheet for a company called Velcro World. And notice that they have preferred and common and additional paid-in capital. Each of them has a $1 par, which is kind of unrealistic. There's retained earnings and there's treasury stock. Okay. So remember, when you're looking at the stockholders equity section, right? Notice they don't tell you a lot about the preferred or the common, like they don't tell you the number of shares issued and the number of shares outstanding. They're expecting us to be able to figure that out. That's some of the questions that they ask down here. So we're going to try to answer these questions. Based on the stockholders equity section, answer the following questions. Remember, all amounts are presented in thousands, right? Well, we're not going to do that. We're just going to do the math based on what they give us. So the first thing they ask, the first two questions: how many shares have been issued? How many preferred? How many common? So let's make the screen a little bit smaller. So question number one, shares of preferred stock issued. Number two, shares of common stock issued. Okay, we'll go back and look at the balance sheet. If preferred stock is 6,000 and the par value is $1 a share, 6,000 divided by 1, 6,000. 6,000 divided by 1 equals 6,000. Shares issued, right? Now we can do the same thing with the common. With the common, it's 30,000 divided by 1. 30,000 divided by 1 equals 30,000 shares issued. So that wasn't too bad. Let's take a look at the next one. If the common shares were issued at 30, what average price were the preferred shares issued? Now, to know that, we have to dissect this additional paid-in capital account, right? So let's first see if we can answer the question. Number 3, if common was issued at 30, what was preferred issued at? Right? Okay. So let's see. There were 30,000 shares issued, common. 30,000 shares issued times $30 per share. Okay. That's what they said, right? Average price 30. So get out the old calculator. 30,000 times 30 equals $900,000. $900,000. The common stock was issued. The total was 900,000. Well, how much was common stock? How much was common stock? 30,000 shares times $1, right? I should say here, common stock at par, right? Is 30,000 times 1 equals 30,000. Well, how much is additional paid in capital then? Additional paid in capital on common is equal to what? 900,000 minus $30,000 equals 870. So you see what I'm trying to do? I'm looking at this additional paid in capital, 1,164,000, and I'm trying to decide how much of that is common and how much is preferred, right? If they give me information on one of them, I should be able to figure out the other. So that's what I did here. I said, okay, if I was making a journal entry for this, what would I do? I would debit cash for 900,000, 30,000 shares times 30. I would credit common stock at par. 30,000 shares times $1 par is 30,000. Well, then how much is additional paid in capital? It's 870, right? So now, here, they made this complicated, didn't they? Total additional paid in, oops, I spelled something wrong. Bear with me, yeah. Total additional paid in capital was 1,164,000. 1,164. Okay. Additional paid in capital common, we just figured out was 870. So that means, what am I left with? Additional paid in capital preferred is the difference. What did I do? Okay, so additional paid in capital on the preferred is 294. Okay, so now let's take the preferred stock. Sorry. The preferred stock at par was how much? Go back. The preferred stock at par was 6,000. The additional paid in capital on the preferred was $294. Total $300,000. Right? This is the cash that was received when the stock was sold. Right? So what journal entry would you have made when this preferred stock was sold? You would have debited cash for $300. You would have credited preferred stock for $6. You would have credited additional paid in capital for $294. Right? So now, if I take 300,000 and divide it by the 6,000 shares that were issued, 300,000 divided by 6,000 is $5, right, per share issue price of preferred. Okay, so that was a long calculation, right? But again, if you can segregate, right, the preferred from the common, and then go into that additional paid in capital and split it out into its two parts, right? That's what you had to do to answer that. Number 4, if retained earning at the beginning was $250 and $30 million was paid in dividends, what was the net income for the year? All right, so retained earnings. How do you calculate the balance of retained earnings? You take the beginning balance add net income less dividends equals the ending balance. So just search for the missing amount. The beginning balance was 250. 250 million, we'll just say 250, right? 250. 30 million was paid in dividends, minus 30. And the ending, we know, the ending is this amount here, 288. So what's the missing piece? Beginning balance, 250, plus X, right, minus 30, equals 288. So what would that be? $68, right? So this is what you would do, right? I mean, again, I'm not a math teacher, but 250 minus 30 is 220. What would I have to add to 220 to make it 288? Right, 68. All right. So that's part 4. Part 5, what was the average cost of the treasury stock? 5, average cost of treasury stock. Now, to do that, we need to know what's the balance in the treasury stock account, 352. And we need to know how many shares of treasury stock there were, 11,000. So 352,000 divided by 11,000 is 32. So the average price of the treasury stock was $32 per share. Right, so that was problem 4. Okay. Now, next, problem 6, problem 10-6A. And this is a humdinger, this one. So let's take a look at it. This is a comprehensive problem. Well, I guess it's not as bad as I thought. So they have a company, they have 2 stocks, preferred and common. The following transactions affect stockholders' equity during 2021, its first year of operations. Now, that's significant because if this was not the first year of operations, there would be numbers in the accounts from the prior period. So we can assume that this was a brand new company. All the account balances were 0 to begin. Right? That makes the problem a little bit easier. So look at what they want you to do. Record each transaction. Right? So in journal entry form, we're going to record the transaction. And then they say prepare stockholders' equity section of the balance sheet. At December 31st, the net income for the year was $490. Right? Okay, so in order to do that, now again, if this was a classroom and I could draw on a board, I would draw T accounts. So what I'm going to do is to improvise a little bit. They're not asking for T accounts, but how else are you going to come up with the balances, right? You need to know what's the balance in these stockholders' equity accounts in order to do the balance sheet. So I'll do it. I'll figure it out some way. Right, so we're going to do journal entries. So let's set that up. All right, so let's go down below and let's set up some T accounts. Well, I'm going to pretend they're T accounts. I'm going to do it in column form. I'm not going to do it in T account form, right? So let's set up a column for preferred, common, additional, paid in capital, right? Retained, let me just abbreviate that, retained earnings and treasury stock. I'm almost sure that we're going to have those accounts, right? Those are the topics that we learned: how to issue stock, preferred and common, right? And treasury stock, and dividends is like some combination in there, right? So I'm going to use these. Remember, stockholders' equity accounts are credit balance accounts, except for which one? Treasury stock. So if I add a number, that's a credit. If I subtract a number, that's a debit. Now, as a practical matter, you're almost never going to have debits to the stock accounts, preferred and common. The additional paid in capital, we could have a debit to that account. Usually it results when you sell the treasury stock, resell the treasury stock for less than you paid for, right? And retained earnings, yes, it is possible to have debits and retained earnings. Very unlikely, right? But it is possible. All right, so with that in mind, let's see if we can do the entries. Now, maybe what I should have done also, let's see. I'll figure out how to do it because I don't want to confuse the daylights out of you. All right, so the first entry, issue 110,000 shares of common stock for $70 a share, right? And that was on January 2nd, right? And we're going to debit cash. And that's going to be for 110,000 times 70. 110,000 times 70 is 7,700,000. Credit common stock. 110,000 shares times the par value. The par value of the common is $1 a share. So that's $110,000. Additional paid in capital would be for everything else. Now, if the stock is selling for 70 and the par value is $1, that means the additional paid in capital was what? $69 a share times 110,000 shares. So, I mean, we could do that math, right? 110 times 69. All right, that's 7,590,000. 7,590,000. Or if you don't want to do that, just subtract 110 from 7,000,007 and you'll get that way. Now, let's come down here and let's put $110,000 in this account, right? And we'll put 7,590,000 in this account. And down here, let's keep track shares, right? Shares. Because we're going to pay a dividend. I'm sure we're going to pay a dividend. And it's always nice to know how many shares there are for dividends. So common, we'll keep a separate column. Common shares, preferred shares, right? 110,000 shares. Okay. February 14th, Valentine's Day. Issued 60,000 shares of preferred for 12. Debit cash. 60,000 times 12. 60,000 times 12, 720. Credit preferred. 60,000 shares times par. The par value of the preferred is 10. Right, so that's 600,000. Right, the difference is 120. Want to calculate the amount? Times 2, right? You don't want to calculate the amount, just take the difference between the debit and the credit. Now let's come down here. 600,000 par value, right? And 120 over here. How many shares? 60,000. Okay. May 8. May 8. Oh, yeah, why don't we just say this? Treasury stock CRVAL, right? No, 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 no. Treasury stock, DRVAL. Just to remind yourself that that's a debit balance. All the others are credit balance. That's a debit balance. Okay. So what do they want? May 8th. Purchase 11,000 shares of its own common stock, $60 a share. Debit, treasury stock. 11,000 shares times, what did they pay? 60. So 11,000 times 60, 660. Cash. $660. Let's come down here. 660. I want to put shares in for here too. 11,000. Okay. That's May 8th. May 31st. Resell 5,500 shares of treasury stock at $65 a share. Debit cash. 5,500 times 65. 357,500. Credit, treasury, at cost. 5,500 times 60. 5,500 times 60 is 330. Okay, so now what? You got a debit, 357.5, a credit, 330. You need $27,500 to balance the entry. Additional paid in capital. You could just leave it at that, or if you wanted to, you could calculate 5,500 shares times $5 a share, right? The difference between 65 and 60. All right, so let's come down here. This is going to be a minus 330, right? Because the first transaction was a debit, the second one was a credit, right? And the shares, we had 11,000 shares of treasury stock. We sell half of them, 5,500. We're going to have 5,500 left, right? But I'll just leave that out. And you've got what? 27,500 over here in additional paid in capital. All right, December 1st. This is where my not being familiar with this program works against me. Doesn't work like Excel. So I have to do something different here. Let's see. Okay. just get rid of this. Sorry. Okay, so December 1st, declare a cash dividend on the common, 25 cents a share, and a $36,000 dividend on the preferred stock to all stockholders of record on December 15th. The dividends payable on December 30th. Dividends are not paid on the treasury stock. Okay. So they have you do this as one transaction. Now you may on a piece of scrap paper do this as two entries. One. Well, let's see. Let me do it like this. When you do it for on Connect, they're looking for one number, right? But let me do it this way. Dividends. Common. How many shares of common will get the dividend? Well, that's why we're so glad that we did this here, right? So remember, the outstanding shares get the dividend. So how many shares of common are there outstanding? 110 minus 5,500. 110 minus 5,500. 110 minus 5,500 equals 104,500 times 25 cents equals $26,125. Now, preferred, they gave you the number, 36,000, but you could calculate that number, right? If you go back, the par value of the preferred is 600,000. $600,000, and the dividend is 6%, 0.06, 36,000. Right? So now, when you're doing this problem on Connect, they don't want you to do two separate debits, right? I'm just showing you this so that it makes sense to you to do. What they're going to ask you to do is one debit for this total amount. You would add these two amounts together, one debit, which comes out to be what, 62,125? Credit dividends payable, 62,125, right? Now, on the record date, you don't make an entry, right? You just make a list of who owns the stock, who will get the dividend. And you'd have to make two lists. You'd have to make one list of common and one list of preferred. But then the dividend gets paid out, actually gets paid out on December 30th, debit dividends payable. Credit cash. This is being weird like this. Okay. Okay. And now there's only one more. Well, they didn't ask you to do it, right? They didn't ask you to do it. See, in the problem, they told you that net income was $490,000, I think. Didn't they tell you that? Okay. So I was looking to make the closing entry for that 490,000, but they're not asking you to do that. Okay. So let's see. I try to do these things. I try to be neat when I do it, because I like you to get into the habit of being like that as well. So I'm a little OCD about it. Okay. I'm trying to get rid of this. Okay. All right, so that's part one of the problem. Now, part two wants us to do a stockholders equity section, right? So it's always nice to go back to the book and look for an example of exactly what they want. And I'm not sure where to look. Okay, let's look here. Here you go. And this was page what? This was page 512. So now they want us to do a statement of stockholders' equity, and we're going to make ours look like this, right, as much as we can. That's why it was a good thing that we kept track of these. So what numbers are we going to use, right? Well, we're going to use that for preferred. We're going to use that for common. For additional paid-in capital, we're going to use that. For treasury stock, we're going to use that. So here's your shares. All right, so let's do it. Let's do it. So the name of the company, right, was Major League Apparel. Right, this was part one. Now we're doing part two. Right? Major League Apparel, balance sheet, stockholders equity section. Now, usually when you're doing the problems on Connect, they give this to you. They start you out that way, right? But when you're doing the problems from scratch like this, they don't. Okay. So stockholders equity. Stockholders equity. Preferred stock. $10 par. Right? Looks like that's all they want you to say, all they want you to do. Oh, one thing we should have done, we should have done this, right? We didn't figure out the balance in retained earnings. So what's the balance of retained earnings? It's the beginning balance, in this case, new company at 0, plus net income, right? Net income was 490 minus dividends. The dividends was what? The dividends was 62,125. There it is. I see it creeping out. 62,125. So what's the ending balance? Okay, I'm glad I saw that because no, then you get to that part of the problem. You say, what the heck? What am I going to do? Now, should we do this the absolute right way? Right. I'm going to do it the absolute right way, even though they're probably not going to ask you for it, right? So preferred stock, it's 6%. It's $10 par. It doesn't tell us how many shares were authorized, but if we knew it, we would put it in. How many shares were issued? 60,000. 60,000 shares issued and outstanding because there was no treasury stock. There is not normally treasury stock on preferred, right? You don't normally see that. So what's the number we're looking for? 600,000. Common stock. Now remember, we don't express dividend on a common stock because that dividend can change all the time. Preferred, it's always going to be 6% of par value, right? Always. So we don't put a dividend for the common, but we would put the shares authorized. We don't know. 110,000 shares issued. How many shares outstanding? Now we had to compute the outstanding shares when we paid the dividend. Remember we did that up here? Where is it? It was 104,500. It's the issued shares minus the treasury stock. 104,500 shares outstanding, right? And that comes out to $110,000, right? This 110, this 110. Additional paid in capital. Additional paid in capital. See the amount? 7,737,500. 7,737,500. Okay, total. Total paid in capital. Right, 8,447,500. And what does that number represent? That number represents what the investors paid us to buy their stock. Invested capital, right? I'm going to put that down here. Invested capital. Retained earnings. Now remember retained earnings, we just figured out up here, where is it? 427,875. Okay. Now in some books, they ask you to take a subtotal here, but our book doesn't do that. Less treasury stock, and I always like to say at cost. And you could even put the number of shares, right? Let's say 5,500 shares at cost. And remember that this is a negative number, minus 330. Why is it a negative number? Because all these numbers in this column are credit balance numbers, and treasury stock is a debit balance. All right, so let's combine everything, equal sum. $8,545,375. Total stockholders equity. All right, so there you go. That's the rest of chapter 10. Next video, chapter 11, statement of cash flow.